Large sums of money being offered to financial planning practices for joining large institutions have led to warnings about the potential distortion of financial planning. The distribution turf war was most evident in reports about MLC's hunt for AXA financial planning practices in the aftermath of the AMP-AXA merger. And BT has now confirmed it is courting those aligned to PIS and Count Financial. Money Management understands BT is offering so-called sign-on bonuses to Count practices for joining the Insto, which range from 5 times earnings and from $500,000 through to $1 million. Premium Wealth Management Managing Director Paul Harding-Davis expressed concern about a potential product obligation which comes with such bonuses.
I haven't seen the terms and conditions that would go around it, but I don't think you could conceive of somebody paying that without some degree of expectation that there will be product flow or product capture as a result of that. Whether that product is a funds management product or a life risk or a platform or all of the above in most of the cases, why would you pay it if there wasn't going to be some sort of benefit in terms of distributing product? It doesn't make sense.
Some industry figures, such as Paragem's Ian Knox and Harding-Davis, said the absolute rule of the Big Four is looming.
If I could be cynical, the difference being that it's like the old agency development loan wars of the mid-80s between AMP and National Mutual in particular, but this time instead of a loan, it's closer to a gift than a loan, with some sort of sign-on fee or payment or a well above prudent business valuation multiple being paid for a business. So it's a fascinating time. And I wonder in some respects whether the transparency isn't, it's different, but whether in fact the transparency of a relationship is now not as clear as it used to be back then.
BT has denied such figures have been paid, with Magnitude Managing Director Phil Butterworth saying any payment offered to a practice was to cover the costs of switching licensees. Also in Money Management this week, Generation Y women make for an attractive client market for financial planners. And alternative investments. Planners are not exactly jumping in, but are products in this space just a sheep in wolf skin? Freya Purnell reports.